Another big issue, and I wanted your candid view on this because this is something that a lot of people talk about, but perhaps in hushed tones, as to why manufacturing as a percentage of GDP has not picked up, right? If you look at the data, manufacturing as a percentage of GDP has remained in the 17-18% mark for the last 10 years. So clearly, corporates in India are not putting that much capex to work as would have expected. Why do you think that is?
So you're absolutely right. Private capex has not picked up, and we keep promising to the journalists and everyone at large that it's about to pick up. So if I say the same thing again, you laugh at me. But couple of things. One, our share of manufacturing exports is abysmally low, and I think government recognized that. So they came out with the PLI scheme. They're now covering almost 14 sectors. 2 lakh crores has been kind of given out, and they realize that if they don't get this right, we will have a problem.
But why haven't they got it right yet?
Frankly, it has right now worked for only 2 big areas, which is electronics and, let's say, semiconductors broadly. In some of the other areas, I think the amount of investment that is, I think it's still working through the schemes in terms of what is the exact and where that incentive should be given. So the companies are learning and the government is learning. And you have heard in a number of sectors where there have been issues between the government and some of the companies in terms of who the money should be given to, how should be given, have they met some of the conditions of the PLI scheme, etc., etc. So I think government will learn and government will get sharper and smarter about where the money has to be given. So firstly, government is trying its best. Government is also supported, saying, okay, private capex is not happening. They've been doing the capex themselves. On the private capex side, I think for any entrepreneur to invest money, they want stability. They want stability not only in terms of the overall macro economy, but they also want stability in policy. They also want to ensure that there is no, if they are involved in the export side, that generally the global macroeconomic side is pretty stable. So stability and being able to kind of have some surety that for the next 5 to 7 years, they know what the lay of the land would be is important.
Is stability a problem right
So
now?
I think we need to work harder on ease of doing business. I think that's I would say one of the single largest problems India needs to solve is ease of doing business. While I think that at the central government level, understanding, appreciation of that is extremely high. But end of the day, you go and ask every entrepreneur, they will tell you on the ground, the hassles they have to go through to get the project off the ground and then keep a project running is still a huge amount of hurdle.
There's no work that has been done on that?
See, they've been trying, but let's say the level of corruption or the number of friction points are still so many that end of the day, it's still a hassle. We might create the best, one-stop window for all approvals, but they still take time. There are only few states who have been able to get it right. And they might be able to get it right, let's say at the start of the project, but on an ongoing basis, then they again run into local bureaucracy, local admin, in some cases, local politicians where there is a problem.
But we've been having this discussion for
and
years,
India
for
needs
decades.
Yes, and India still needs to sort it.
And there's so many countries that have moved on, right? Look at Vietnam, look at Bangladesh, in certain areas in terms of
very well, right? So my view is that I think some states have realized it. So some states are doing a better job and they're getting more and more investments. I think generally, if you look at, UP is a great example where it was written off many, many years back. So there's no point going to a state like UP. But look at the kind of investments you've been able to attract because they've been able to solve some of these problems. Gujarat, Maharashtra have always stood out in terms of their ability to attract the investment because entrepreneurs see that here, their ability to take care of some of these issues or ability to manage some of these issues much easier, much simpler than some of the other states. So, and some of the states are losing out, right? Some of the states like Orissa have attracted a lot of investments because they were able to provide that single window clearance and their people's experience in states like Orissa was very, very good. So they have been able to attract large amount of investments. You saw West Bengal, a lot of the industries did move out because maybe they thought that it is a difficult state to deal with. I'm not trying to comment on any politics here. I'm just saying that if you just look at the movement of capital and capex and where business groups have invested, it's a pretty clear indicator that yes, I think they find doing business in some of those states much easier than some of the other states. So my view is that ease of doing business is a problem. So why would a manufacturer where you're talking about a 5, 7, 10 year return on capital, why would you invest if you're not sure about stability, if you're not sure about clarity on policies, you're worried about ease of doing business, etc., etc. We're also forgetting one more thing. Earlier, Indian entrepreneurs were willing to take more risk because they thought that they could manage the financial system. They can take as much debt as they want, they don't have to repay it, everything will be fine. Now, it's a problem. If you take too much of debt, and let's say you become a NPL case, and if it is discovered that you did not do everything right, you could not only lose the asset, you might not be able to become an entrepreneur all over again, because no one will lend to you. Your name will be out there. Everyone knows your name and knows that some problems happened with you in the past. So,
do you think that's become a bigger deterrent now than, I mean, there is
so
a
I think
narrative
people are taking
that,
less debt, and so also at some stage it plays on the risk to some extent. So people will take a little bit less risk than before because they don't want to lose that asset. No entrepreneur is getting into a business to do fraud. So in that sense, my view is that the risk-taking ability is also reduced a little bit. I also see a clear, at least in a lot of business groups, where the second, third or fourth generations are not interested in running the businesses. They want to create family offices and have some professionals run it. Now, end of the day, a promoter is the one who can take much more risk than a professional. I mean, let's not take this point away. So if the promoter is not there to take the risk, a professional will take some risk, but not as much as what a promoter could take. And if a lot of these promoter families are going to see the new generation not willing to run businesses, where is the question of more private capex? They are busy managing the money they've already made and created.
the feedback that I get from a lot of entrepreneurs is that there is so much red tapeism, so much bureaucracy, that taking large risks is almost not encouraged, as opposed to what happens in the West, where, taking big bets, taking large risks is encouraged by governments. And then if you fail, that is also encouraged to fail and move on to the next thing.
So failure is not seen as a bad thing in a lot of the economies around the
Correct.
world. In India, there are large business groups that are willing to take risk. I mean, I don't need to name them, but there are business groups that are taking risk. New business groups are emerging, which have come out of nowhere and, managing large businesses and doing very, very well. So India is a large country, a lot of entrepreneurs with a hunger to do well. But my worry is that when you talk about private capex, the reason why some of them are not doing it is because of the ease of doing business. Also, I think we have to be very careful. MSMEs need to be given sharper incentives. You give too many incentives to any sector, then the incentive to acquire economies of scale, incentive to take risk, incentive to become leaders in terms of technology and manufacturing technology, etc. using is not there. Just by being there, I'm getting some incentives. So we have to be very careful about even providing a lot of incentives to all kinds of sectors in the economy. So my view is that private capex, by the way, if you look at I read today only that there is an announcement that the number of announcements by various private side on the investments they intend to make has gone up quite a bit. These are announcements, but that's a good sign. At least, people have now started announcing large projects across the entire private sector. We are seeing some sectors where the investments are growing quite steeply. But there are a number of sectors in the economy where the people are just investing enough to take care of the demand they see coming down the pipe.
So which are the sectors where you're seeing a disproportionate amount of investments right now?
So you're seeing a lot of investments on the infrastructure side, right? I mean, one is government-led, but secondly, in roads, in power, in transmission, in data centers, on the fossil fuel side. I mean, you're seeing, some of the commodity markets, you're seeing a lot of investments continuing to happen. There, the policies are clear. I think the government has finessed the model under which the private companies can come in and make the investments. The tendering process is clear. So wherever the clarity exists, wherever the returns, if you do execution at a decent level, you can get these kind of returns, people are willing to invest. Whenever there is lack of clarity, I think then people either want, because for the high risk they're taking, they want more return, or they're willing to take some shortcuts to manage the system so that they can get those returns. And the moment those returns are managed, that's when the entrepreneurs who want to do it the right way don't want to touch.
So if you draw parallels to what happened, say, in China, when large amount of corporate capex was put to work, banks had a huge role to play at that time. What do you think banks in India can do to increase the amount of capex that corporates can put to work?
See, if the entrepreneur has a good background, is coming up with the right project, with the right amount of equity, they will find the bank financing. I don't think the banks are saying, oh, you might be good, but I'm not willing to lend you. That's not the issue. It is, are there bankable projects, bankable entrepreneurs, bankable industrial sectors? If they are there, banks will. If not us, private credit. If not us, foreign players will come in and provide them the capital necessary. So it's not that it's just reliant on Indian banks. NBFCs will do the same. There are a lot of family offices which are opened up, which are also willing to provide that capital. So my view is finance is not the issue. What is the issue is bankable entrepreneurs, bankable projects, bankable sectors. And if that was to all come together, the finance will come through. Now in China, some of the reasons were different also. Firstly, the banks are owned by the government. For them, returns don't matter. In many cases, the state governments are themselves investors, and they're willing to put in a lot of quasi-equity or equity in the form of free land, free, less taxes, free electricity, etc., which they could control. So some of these items which they could control, they were willing to give it at a price where the project could potentially become viable at a low return, which obviously can't happen in India. And now China, obviously, in terms of technology, size, scale, has reached a level where sometimes it's just very difficult to compete with the Chinese in some of the sectors they've become really big at. So my view is that I don't think finance is a constraint. It is more to do with the entrepreneurs themselves and what risks they're willing to look at. I mean, people who have done well, they are able to get all the financing. I mean, if you look at some of the larger groups or even the smaller groups, there are a lot of Indian small companies who are going and making acquisitions abroad. If they've done well, they're able to get the financing, even from foreign banks. I mean, till now, Indian banks are not even allowed to do these acquisition financing. The foreign banks are willing to back them up. You are the right, entrepreneur with the right background, have executed well, you are acquiring the right asset. You, at some price, will find the financing. That's not the issue.
Okay.